With tokenization, especially with what you sort of stated earlier, there's things that are on chain and things that are off chain. The number one benefit that you get for tokenizing something, placing it on chain, people talk about real world assets, DeFi, all of this. The main benefit that you get is the ability to use that asset as a shared unit of account. So, well, what does that mean? Well, traditionally, you would have all these different brokers, banks, all of that, right? And they would have their own systems, their databases, and all of that. And they would keep track of all of their assets, their money, all of that, right? Well, the means for them to be able to exchange with each other, and the means for them to be able to go, hey, look, I possess this, you possess that, we're going to trade. It's there's friction there. Let's just put it simply, right? There's friction there, and every single person that they need to engage with, they need to essentially create some method to be able to keep track of the assets that they're engaging with each other. Now, with these assets being tokenized on chain, the asset being on chain allows it to be a unit of account between multiple systems. So you could have one broker in one unit in one part of the world reference that unit of account and very easily sell that asset or trade that asset, put that asset into another smart contract with another broker anywhere in the world, and they can do that with anybody they want, as opposed to doing this whole contrived syncing databases, trying to make sure that both of you have a copy of the transaction, and you doing this with tens, if not hundreds, if not thousands of different entities. And maybe you might find entities that may consolidate, and maybe you can do business through them. A lot of people like to say like the big four banks is like the majority of, like 80% of the finance goes through like the big four banks in the United States, especially like going out of the United States. And most of that is because of that consolidation, because it's very hard for someone like you or me or just some rent or just a broker of somebody to be able to have access to all of these different parties all over the world because of how segregated these systems are. With everyone referencing these assets on chain and these networks all being a database that we all can reference, we can essentially remove that friction in terms of being able to account for the assets that we're engaging with. And with that, I think the true value comes in there's I guess you could say that there's more liquidity, but you could say the settlements and the engagements are going to happen significantly faster than having all of these different brokers and all these different parties keep track of all of these different things. A simple example that people like to say is, oh, payments being faster, payments being instant. And that's only because in the traditional system, you need multiple parties that are in this chain of this payment to keep track of all of these things. And it takes time for them to keep track of those things, especially when it comes to settlements for assets, especially when it comes to payments, anything. And we can essentially reference these neutral databases and keep account of all of these assets and be able to trade with each other. And this becomes really sophisticated too, because you could have two different applications. You could have a smart contract that is like a marketplace or finance application, and you could have a supply chain application that is an entirely segregated application. And you can move that unit of account from one application to the other application, where in a traditional system, you would have two entirely segregated systems that would need some sort of bridge or mechanism to be able to communicate, to be able to keep track of that same asset. So I think the biggest thing with tokenization is allowing this neutral database and this neutral or this unit of account on this neutral database that can be exchanged between different applications and different parties all around the world.
And this is just exploding in my head, but brother, and so what we're doing is there's a unit of account, and for the most part, like we said, there's liquidity. Well, why do we need liquidity? Because it's an ability, it's a currency, a liquidity that can be turned in from any asset to another asset that's got a value, and you can liquidate a car title or a futures contract or an options or derivative or a stock or ownership in a royalty stream or whatever. When you have this interoperability and you have this tokenization to be able to exchange things, then in essence, what you're creating for practical purposes in the real world is a whole bunch of different currencies or a whole bunch of different ways to get liquidity that may not be a dollar bill, may not be a stock certificate, may be on chain. And on top of that, Quincy, it's blowing my mind here, brother, but the literally the thousands and thousands, if not tens of thousands of transactions, interactions that can happen if you're an options trader and you own a farm and you got cattle and future land and stocks and options and all of a sudden it's going to become such a behemoth to try to do a traditional tax return at the end of the year, right? By trading these tokenized objects of value around and trying to what a what's the cost basis, short term, long term. What's the worth? It's going to become. I believe it's going to potentially render traditional IRS type counting of cost basis and time and short term and long term in a world of tokenization where everything's tokenized and things are trading like oxygen molecules in the air. It's going to render accounting and the IRS processes as we know them today antique, and I think unusable. Do you, have I lost my mind, or do you think I'm onto something here?
No, I think you're 100% correct. I think one thing that's going to be really interesting is now that we're able to, so let's say we do have cash, like different currencies, different assets that can be settled, commodities, derivatives, whatever. The means of being able to audit and be able to keep account of all the different engagements becomes it's like a query. It's just like you're able to query your address and see the assets that have been in your address and be able to query down to all the different addresses that tokens been able to pass through. You're able to do that with all these other assets as well. So instead of having to audit all these individual entities to be able to keep track of all the engagement they may have, you can just essentially just audit these chains. Or you may see people create their own. You see, there are different ways to go about it. There could be permission networks, there could be sub networks, there could be private networks, but the same sort of thing applies to all of them. Is you can use general querying tools to be able to audit all of this information at scale without having to go and audit individual entities to be able to keep track of all of that. So yeah, when it comes to like the IRS trying to keep track of all these different engagements or this settlement or SEC or whatever, you can keep track of everything in such a manner to where you don't have to you don't have to query individuals. You can just query the entire chain.
Yeah, that I loved your description a couple of weeks ago, maybe 10 days ago, when you talked about how you described, and I'd love you to do it again, maybe an encore performance, but the entire internet of value is the DEX. And you described XRP as basically being a liquidity algorithm for the DEX. Can you refresh for the audience that didn't hear that? Could you tell that story again so you could paint that mental picture in their heads for us?
Yeah, so I was talking about XRP for a little bit, mostly because I was explaining just certain features that I found interesting. Mostly, yeah, that the network's a DEX, and there's a feature called rippling. That's essentially that is that like liquidity maximizing algorithm. And actually, the reason I found that interesting was when I was working at that PE firm. Like I said, when I was working at that firm for a bit, that was actually one of the first networks I found really interesting because I was sort of familiar with like just a bunch of general finance, like BS, if you want to put it. There's a bunch of stuff in finance. And the thing I found really interesting, and the reason I say that is the big topic of discussion at the time was arbitrage. I know people like to talk about it in crypto, but like, what was it? Forex arbitrage and all this other stuff, and that was like the big topic of discussion at the time, at least around the firm and a lot of the guys and some of the people we hung out with. And the thing that drew me to that was I'm like, wait a second, so this network's a DEX. So if I were to like I said, arbitrage, I could essentially like use this network, and these fees are so cheap. Like trying to capitalize on a spread between some of these exchanges could be like 50 basis points, 25 basis points. Like with XRP, for instance, it was like the smallest possible unit I could possibly even measure. It was tiny just to be able to make an exchange. I was like, holy cow, that basically makes like that's not the spread, but that's like the fee. So the spread would be between whatever two assets, whatever it is, and it was really liquid at the time. So the spread could be 3%, 4%, 5%. Like the chance to be able to capitalize was huge, and the fees were next to nothing. So instead of like taking advantage of like a 1% spread and having a 25 basis point fee, there was basically no fee and just a bunch of illiquid spreads all over the place. That I thought was like holy cow, like just a bunch of pairs and a bunch of like I said, arbitrage, just a bunch of assets. At the time I was like, oh, look at forex, but I think people were listing Bitcoin and Ethereum and different other. I think GateHub was it that was listing a bunch of assets on there. and just it wasn't even like doing anything because it wasn't like I was gonna go on there and trade, which is funny because I ended up creating a bot for that, and I ended up not really using it. But when I first came across it, I wasn't even really thinking about trading. I was just thinking about how efficient it was, how cheap the engagement would be, even if we saw similar spreads. Like it was super illiquid, so you'd see like 3% spreads on XRP, where like on some of the other exchanges it'd be like said like 50 basis point, maybe 1%. That would be like crazy, just for some of the assets that are being traded, and the fees were just like huge, and that didn't even count for like the executions, because some of the exchanges will only make you make some will only make allow you so many executions, so you couldn't do like high frequency or anything like that. But yeah, it was just something that was found so interesting, and because of the rippling algorithm, in theory, right? I don't even know if anybody's doing this. Maybe the AMM's trying to do this. But in theory, you can arbitrage multiple pairs at the same time. So normally, if you're like trying to arbitrage a pair, you're like taking advantage of like two different liquidity pools and the ratio between the two assets in those pools. But because the network was a DEX, and because there weren't any pools, and you're basically just trying to maximize liquidity between any asset you can find liquidity in, I could be arbitraging the US dollar, the Japanese yen, and the Mexican peso at the same time. But instead of going, and that's the thing, because of rippling, I didn't have to figure this out, or you wouldn't have to figure this out. But you don't have to go from dollars to yen. You may go from dollars to peso to yen because there may be a bigger spread on that. Or you may go from like it's all of that. I can't even map out all the different combinations because you can technically trade into anything and trade out of anything. So it was just this really interesting idea where it's like, holy cow! Like imagine having like this cross asset arbitrage, and as opposed to like, and that's the thing, the reason I say that is every time you try to arbitrage a liquidity pool, that's a lot of capital you have to tie up into that pool to arbitrage. Where here you could technically take the same bit of capital and arbitrage multiple assets at the same time and not have to like split all these. It was just a crazy idea when I first came across it. I was like, holy cow. And it still is. Like, I think this is the biggest thing, and it's not like it's a huge thing. This is like if someone went to the most extreme example and like tried to be like the biggest freaking market maker and try to like saturate the network with like capital or whatever. But the thing is like, holy cow! Like you could like I said, you could be arbitraging in multiple directions at the same time. And even within that, there's like layers to that too, because it's crazy. So yeah, when I was at the firm, it was just one of those things where I was like, "Holy cow!" And it sort of drew me into everything. And the thing that I found really interesting on that, and I still find interesting now, is everybody was so focused on like the native like cryptocurrencies. Like XRP is cool, and obviously like XDC is like my network and everything, and everyone likes Bitcoin and Ethereum. But the thing is it's the things on the networks. That's why I talk about tokenization and stuff. But even like the apps, the services, the smart contracts, it's the things on the networks. So I'm thinking about like, oh, arbitrage or whatever. There's an element where there's like, oh, well, in the mind that I had at the time was through like Forex. So it's like, oh, you could arbitrage all these currencies at the same time. Oh, and like Forex currency spreads aren't anything crazy. So it wasn't anything like, you know what I mean? But it was one of those things where like, what if there's commodities? What if they're this? What if they're these? Oh my god! Oh my god! Oh my god! And that's when I first started talking about this and first started like blowing up. I was like, you don't have to start thinking about like cash and like fiat and money. There are other sort of like what you were saying. I was saying unit of accounts, but I thought you were saying like these shared assets. There are different. I guess there's different units of account that you can trade on these, or not even trade, but keep account on these networks. And there are different applications that can use these different units of accounts in different ways. Now, not everything has to be an asset to be traded. Sometimes it could just be something to keep track of something, like supply chain. It's literally just a token to keep track of something that's traveling through the supply chain. It could be a lot of different things. But these things are all things that all link together. That ability to be able to share that unit of account, and that ability to create these new type of applications because of these assets, these tokens, these units of accounts that can be exchanged and engaged with.
Yeah, I love that. I absolutely do. We are such at the infancy stage of utility, and like you said, it's not that we focus is in first grade on the tokens, right? We haven't gotten into middle school yet. We really don't even like the VChain model blows my mind. this the supply chain of supply chains, and how there's an endless ability to connect every supply chain to every other supply chain, and then all the calculus and all the derivatives and all the ordering processes and just in time inventory and all the things that can come out of. Are you familiar with VChain? And that model blows my mind. I don't. Do you have any comments on that?
I'm familiar with them a little bit. I haven't been following up with them for for a long time, but I see them everywhere. I think I've spoken to some VChain guys at a few events, like just in general. But yeah, I haven't really been keeping up with them too much.
Well, do me a favor. I want you to tell us today your passion, what it is you're working on, what it is the next the thing that's got you most excited about tokenization, and how is that excitement and vision for what you're working on now translating into your day-to-day priorities. Can you tell us what that is?
Yeah. So it's so funny because I feel like I'm in like a weird transition. So let me explain like my, let's call it passion for the past like forever, I guess, and where I'm sort of going with now. And for a while, I wanted to, especially in crypto, I I see that there are a lot of opportunities for people to build like these startups in a sense, and I thought I see this in different, like, and we sort of been talking about this. Is sort of the sort of like startup, there's sort of like this decision: do I want to go more app development or more sort of like expanding on what tokenization is? And what I mean by that is there's a bunch of different types of tokens that can persist, like different types of assets, like different types of like whether it's an identity or a document, whatever, right? And these things can become incredibly sophisticated. Like a supply chain application may look like a supply chain application, but it may be a collection of tokens that are being tracked by this application. And there's sort of this aspect where these traditional startup products aren't going to be the next big thing. It's going to be essentially these new like fund managers that are able to create these sophisticated finance products that are able to automate traditional assets that are going to be the biggest thing. And I'm like, oh, dude, I could be that guy. Like, I could be that guy. A lot of these different, a lot, and it's not just taking anything and creating just crazy services or anything. It's taking services that already exist, taking assets that already exist, taking concepts that already exist, and allowing them. There's two big aspects to it: automating them on chain, and then saturating them with participants. Because you can have all the code in the world, but if there's no one to trade it with, no one to engage with, it's nothing. And if you have everybody coming together and they're like, "Cool, let's do
I'm
this,"
sorry, brother. Did you finish?
can you hear me? Can you hear me? Uh oh.
I can hear both of you.
Okay,
Okay.
I lost sound for a moment. Prometheus, you can hear me, brother?
I can hear
Yep,
you. I can hear you.
absolutely can hear you guys.
But
And
Quincy, are you
fascinating
there?
conversation.
yeah, I'm here.
Quincy, are you with me?
Yeah, I'm with you. I just don't think you can hear me.
Can anyone hear Quincy, or is it just me?
I can hear Quincy. Rob, you might need to drop him down and bring him back up.
Okay, Quincy, I'm going to do that real quick if you don't mind, brother, because I've lost your audio and I can't hear you, so I'm going to drop you down for just a second.
That's cool, man.
Drop him down and bring him back up.
Okay, Quincy, I'm going to do that real quick if you don't mind, brother, because I've lost your audio and I can't hear you, so I'm going to drop you down for
That's
just a
cool,
second.
man. Dang, I was going in. Yeah, there's gonna be this new
Well,
position.
Rob, you guys were talking about tokenization, and that's something that my company and I are working on as well, especially with real estate. And Citigroup right now estimates that tokenization is going to be something like a $4 trillion market by 2030. I'm going to link the article down below, but basically all the major players are looking at how to use tokenization. And for anyone listening in the audience, what you heard from XDC about his journey into coding and crypto and arbitrage between different pairs. This can sound a little overwhelming at first, but if you just give it like do like an hour or half an hour a day of learning in this space and actually start working towards this, you'll learn a great deal very quickly. In my previous venture, Golden Roads Capital, we actually built a trading bot and we did arbitrage between Asian markets and Western markets for things like Ethereum and Bitcoin. And for a while, we were quite successful at it until my French business partner basically decided he wanted to work at a French conglomerate and shut that venture down. But I learned a great deal from that experience, and it's totally possible. What used to be in the realms of things like or folks like financial like those who had only financial training, now it's in your hands. It's up to you to do the somewhat learning that's involved in this space, and then afterwards you can take advantage of these incredible tools and opportunities. So just thought I'd share that, Rob, while we're waiting. And please retweet and reshare this space. I really believe that the Cool Show is the one of the coolest shows on X, as cheesy as that is. But definitely tell your networks. You never know who might really benefit from the knowledge and wisdom being shared here.
Well, thank you for that, brother. I sure appreciate it. Trying to get Quincy back up. Brother, I sent you another invite to co-host.
Yeah, can you see
Prometheus,
me?
you're a
Or can
scholar
you
and
hear
a
me?
gentleman, and we are going to get to questions here very soon. I'm
Can you hear me?
so excited. It's the very first time I've ever had the ability to have this conversation with Quincy, and his mind just fascinates me when I hear him speak, because I can see him having to shift gears and pull things down and struggle with the precision of the words to say to explain the idea that's running through his head. And I catch glimmers of that in myself, because the quantum expanse of how we're all having to rethink everything, every aspect of life, every relationship we have to everything that we thought we knew, every story in the past, every work product, every tradition, every rule of finance, to go, just to go from fiat, debt-based currency to asset-backed currency, to go from fiat money to sound money, and to go to interoperability on a level playing field, and to take what Quincy was just talking about, the ability to tokenize things and then trade, but do it across 195 different countries, and do it instantaneously, 24/7, 365, with tiny, tiny margins and arbitrage opportunities, and to bring finance and trade to nations that don't even have clean drinking water, but they have smartphones and the ability to all of a sudden have capital. And then to begin to develop and dream and have a vision, and not have all of that corrupting friction and geopolitics and local politics and banking and just all of the sludge of yesteryear almost gets evaporated with these quantum technologies, and with the blockchain, and with the utility that's going to be on the blockchain. So I would love to hear Quincy's idea of how trade finance and just everyday finance in some of the lesser developed countries around the world are going to experience growth and experience the ability to go from idea or dream or passion to a few clicks and some learning, and all of a sudden creating things that perhaps the Western world will never even have a chance of developing, because we haven't had the lack or the scarcity or the need, or the we don't have an understanding of the way they see the world, because we've been spoiled and we've been rich and we've had lots of material goods and things and creature comforts, whereas people on the other sides of the world that have not nearly had the blessings of riches or the curse of riches, whichever your perspective is, when they begin to get the paintbrush on a canvas and think about finance and think about building and think about commerce and think about community development or nation development, I don't even think we can, just like we couldn't ever think of picking up a smartphone when Apple came out and clicking on a button and have an Uber show up and pick us up. That the things that are going to develop in all over the world in lightning speed is, I'd love to, Quincy, just like you're still in listener mode, brother. I'm trying to get you back up. I don't know if you've been able to receive my invite. We
I do not know what is up with uh, the Twitter stream.
Maybe you're first and then try co-hosting after.
Yeah, I just canceled his co-host invite, and I'm going to try it just on a speaker basis again, Quincy. So I just sent you another one. If that doesn't work, we may have you just leave the third world nations or lesser developed nations and how revolutionary that's going to be. I'd love to hear your perspective on that. So you've got the floor, brother.
Yeah, can you hear me all right?
Yes, sir. I hear you.
Perfect,
Glad
perfect.
to have you back.
Yeah, so yeah, so when it comes to especially like basically everybody else in the world being able to conduct a global trade, because obviously like the U.S. has like a very very unique position in that. But the biggest thing comes down to not having to go through a multitude of intermediaries to be able to have access to whether it's capital, whether it's assets, whether it's participants. Traditionally, and I sort of see this more and more now. I never really thought about it. But traditionally, the furthest that you can extend your business comes down to how many like relationships you could have. And then you expand, and really just that just comes down to, like I said, that whole syncing, that whole databasing thing. It comes down to like that business relationship. There isn't really a way to access a neutral marketplace like a DEX or some DeFi application to be able to exchange in assets in these traditional environments. So you always have to find a broker or a bank or somebody to be able to find somebody to be able to engage with you, and uh, that's not a big deal for the big guys, obviously, because they have access to everybody. But if you're the smaller you are, the harder it is to be able to get access to anyone. And it's actually funny to sort of put it this way because I was talking to this one guy who's building a DeFi marketplace uh, for farmers in Africa to be able to tokenize their crops to be able to engage in peer to peer trade. And we're not even like, you would think, oh, so are they trying to like sync their databases? It wasn't even that. There was just a lot of politics between the different nations in Africa and being able to do cross border trade between them. And them just being able to utilize this DeFi marketplace allows them to be able to engage peer to peer and be able to subvert all of those traditional parties they would have to engage with to be able to engage with each other. And it doesn't even have to be like technological; it's just political. Like, oh, you have, and sometimes you'd end up with like these manufactured monopolies, like different companies put in place that are able to have more access to more people than others based off. But that's the thing. That actually hinders a lot of growth for the smallest. Really, the smaller you are, the harder it is to grow. The bigger you are, obviously, the more access, the more participants you can engage with. And now with being able to access all of these different assets, all these, like I said, even people like to talk about peer to peer, and they think about going to the store and like buying like something from the store. But now you can have farmers that are trying to sell their crops into different marketplaces be able to sell them directly to those people, whether they're different markets, whether they're local markets, farmers markets, whether they're supply chains, and people are passing them into whatever it is. They can engage in these services peer to peer, and don't need to go through a collection of different parties or brokers to be able to even have access. That's the key word, access. Because once they have access, then they can engage in whatever activity they were going to engage with, and that's the key.
Yeah, absolutely. Let me ask you this. Given the technological, I guess, comfort level or sophistication that we have in America and the developed nations, and the fact that it anyone can know with 10 minutes of familiarity with what the tools, what we're going to be able to do, basically to be our own banker, to have access to all these documents, to have access to these services, to have access to the utility and the functionality of tokenization and the suite of tools that come with it. How how fast do you see how fast do you see, I guess, the gale force winds of creativity ravaging through traditional banking in, let's say, America, and reducing headcount, reducing employee, revenue, and then reducing just even the square footage on the commercial real estate side of these major banks that are going to be so disrupted by this, the speed and the utility of blockchain. How do you see how is that going to play out in the next 3 to 5 years?
Yeah, so I love this question because it is like, oh goodness. So it is like a war where you have 50,000 people die, but nobody was shy. And that's sort of like when it comes to these jobs, like, oh, these jobs or whatever, or even the automation and what it means for these traditional businesses. And what I mean by that is what happens first is people are able to create services without creating, and it's not that they don't create new jobs, they create new types of jobs, but the traditional job that would have done this thing in the previous sense is no longer there. And a perfect example of this is I saw this with cloud. The reason I say this is you now have startups, right? And before cloud, if you wanted to scale your application worldwide, you would need to go set up data centers in different parts of the world to go be able to scale your application, just so people can have general performance in that area. With cloud, overnight, a startup that got just enough capital could just take whatever basic application piece of code they have and scale it worldwide overnight by being able to run it in these different cloud environments. And it wasn't that, oh well, now all these data, these database administrator jobs are all gone. No, they're all handled and consolidated under Amazon, and maybe there are probably less of them than there would have been if they were operating independently or something. But the thing is that new company, let's say it's Uber for instance, they didn't need to hire those new jobs. They focused more on their developers. They focused more on their drivers. You know what I mean? So the jobs that are getting automated are essentially jobs that are just gonna they're gonna slowly not disappear, but just turn into something else, or they'll be more focused in something else. Like I said, if you're working for if you're some database administrator, traditionally you might have been part of some company, some random insurance company managing their servers. Now you're probably working for one of the big three cloud services, probably, if not, probably in the top 10 biggest cloud services, because most independent organizations don't host their own, infrastructure now. They go over to a cloud service provider. And I think when it comes to these new services, these new tokens, this new means of engagement, I think what is going to happen is, and you don't normally see this scale because you don't look at, and I say this because a perfect example of this is Instagram. Instagram sold to Facebook for $1 billion and they had 12 employees. 12 employees. Now, they wouldn't be able to do that if they had to literally manage their own infrastructure, like Facebook did. Facebook had to manage their own infrastructure because there was no cloud infrastructure, So it's one of these things where you can have an instance like that where 12 employees are able to sell this billion-dollar company simply because they don't need to offset their infrastructure. So when it comes to these new Web3 services, new tokenization, all these, I think what you're going to see is you're going to see small startups conducting business at the scale of large business at a significantly lower cost, a significantly lower overhead because of the automation, because of their access to their different participants, because of all these different benefits that they get. So instead of, because that's the thing, the reason I say that is you don't look at that as, oh, jobs gone, but if they operated the same way that traditional businesses did, they probably would have had to create like 10,000 jobs just to, run this giant global, organization or whatever, where now it may be 100 people, or maybe even less or whatever. I mean, depending on the, this is just, a hypothetical, but the biggest thing is you can now be able to conduct these services at scale that would normally have to be conducted through these giant organizations. Similarly to where without cloud, you would essentially need to, like 50% of your business would be like setting up all of this infrastructure for your business, where most startups now host all their stuff in the cloud. They pick a handful of little offices that they work out of, and that's their infrastructure. They don't need to, and that's the thing, even with the offices, there was a company like WeWork, even like the offices, people are able to offset aspects of their infrastructure by being able to utilize other services, and they're able to scale a lot bigger. Like you said, like with WeWork not having to buy a building or having to buy a floor or whatever, and all this. And I think you're just going to see more of that in a sense, and that automation is just going to allow for smaller brokers to be able to operate on the scale of big brokers without having to have the infrastructure of big brokers.
Yeah, and then that extra dynamic of not only the tokenization but the AI. you know, and you throw in the AI with the tokenization, and then it's just a whole completely different. It's just on a different level. I mean, again, hard for us to get our heads around it because we've never lived in a world like this before. But you know, when you've got quantum computers, I think IBM said 3 weeks ago or something when they rolled out their latest quantum computer that it could ingest every book and every document, every video and every movie ever produced in the history of man in 15 minutes. I mean, the ability to again, who knows what a qubit is? Who can even tell us on this call how many zeros are in a qubit? You know, and if you apply Moore's law to quantum computing, and you have IBM computers that are operating at that kind of scale right now, I mean, it's kind of hard to get our head wrapped around it, isn't it?
Yeah, I think one of the biggest things, at least for me, that's going to be really hard to wrap my head around, especially when it comes to blockchain, tokenization, all of this. So people like to talk about the internet of value, especially on these networks, and especially these the native cryptocurrencies, like the native tokens on these networks, whether it's Bitcoin or Ethereum, XRP, XEC. Um, as more assets are engaged on that network, the native cryptocurrency is going to be the neutral form of capital for parties to be able to engage with. And I say this because, how does somebody in New York and somebody, how does a business in New York and a business in Tokyo engage in e-commerce? Well, like before in the traditional sense, you have all those different brokers. In this blockchain sense, those different parties have their own different assets, and they use the native cryptocurrency as that neutral form of capital. And the thing that wows me is the number one reason why people, the number one thing that brings demand to these networks. I like to talk about apps and services and all of that, but it's really engagements in those apps and services. And the engagement's based off volume. And the volume's not just based off of the native cryptocurrency, it's based off of everything else as well. Because like I said, if the native cryptocurrency is the neutral form of capital, then everything's going to default back to that because that gives you the maximum amount of people to engage with and the maximum liquidity into any asset on chain. So it's one of these things where the thing that I find so baffling is, well, what is every capacity of what is every way that you could define a asset on chain? And I don't mean in like a silly contrived way like these meme coins. I mean, we could talk about, okay, so we could talk about securities and like stocks, right? And then we can go to commodities and like derivatives and options. And then, oh, well, there's carbon credits, right? There's carbon credits. That's like an abstract. Oh, and then there's like compute credits, right? Like if I go to Amazon, and not just like Amazon, but like any sort of like third party web service, there's an element where I could essentially get, and it's not just credits, but it's just like cash in the form of being able to use their services. And I only say this because these can be used on third-party markets that people can liquidate out of and be able to exchange with. So what are all the different types of units of account that can be exchanged on chain, and how much volume will we see at scale with all these different units of account? I mean, it's already interesting. People like to say all of the money, all of the debt, all of the commodities, all of the derivatives, okay, well, what about every single thing that you could possibly put on chain that could be used as a unit of exchange or used as a token, and be able to be exchanged with anybody on chain? What is every possible thing that you could categorize and tokenize? And what would that look like at peak saturation? And like I said, I've sort of named off the obvious ones and then the not so obvious ones, like the carbon credits. But there's some that like we don't work in. Like nobody here on this call, nobody here on this planet works in every single industry ever and has the mind to be able to see what certain things are not just of value, but things that are being exchanged. And like you could be talking to somebody who's dealing with supply chain and airlines, and they'd be going, wait a second. It would be really, really, really great if we're able to track this part. Is there a way? Oh yeah, actually that could be another unit of account that is essentially and that's saying that part that's being tracked could also be a whatever that can be exchanged or whatever that can be insured, and so whatever it is, it's hard to be able to keep account of every possible thing that can be kept as a unit of account. But it's interesting to think of, oh my god, what would that look like at scale? And I only say this because you're able to take all this economic activity and you're able to saturate a neutral market where right now it's almost dependent on how well a given establishment is. It's hard to describe it, but how do you take different units of account that are hard to be quantified but are at a micro scale from like individual businesses, but can essentially be tracked on a macro scale by being able to be put on chain and still engage with those businesses. And I only say that because we can't anticipate every single thing that could be put on chain. And I only say this because every time I talk to somebody that's part of a new field of industry, they always put some like crazy, oh yeah, well we do this random niche thing and keep track of these things and we engage with these people I never knew existed. And we do this all the time. Would this work on chain? And I'm like, oh my god, yeah, actually that is insane. Like I say the carbon credit one, but there was this whole thing where someone was using NFTs as, and it's not even NFTs, but the NFT was a certificate that was really no different than any other sort of certificate that you would have to donate to this organization, but it was used as a means to where people that were able to donate to that organization were able to, and the organization was cleaning up like different like trash disaster areas in like Indonesia or something. But the people that would individually go do it, since people would pay in crypto to these NFT certificates to go help clean these areas, the people that actually went and did it got the cash. Like that's thing, they would have to fill up so much trash, and so much trash would equal a certificate, and the people would buy the certificates, which would really be just like a tax write-off, like, oh, I'm donating whatever. But the thing is people can donate and cash write off, and you have an automated means to be able to give cash directly to the people that are actually making that impact. And I'm just like, oh my god, I never even thought of that. I never even thought in a million years of that, whatever. And I can't even think of all the other things that are like that can be tracked on, like I said, a certificate that's tracked on chain that takes the incoming revenue and gives it to the people that are generating these certificates by collecting trash, and essentially, and the whole thing is just to clean up these areas. It's just it's hard to be able to anticipate all the different things that can be tokenized. So to think, what are all the things that can be tokenized?
Indeed. And, sometimes it helps to paint a picture because the concepts can be abstract until all of a sudden you see, all right, let's take a case study. Let's look at Amazon. Well, look at a company like Amazon that has payroll and clients and vendors in 120 countries. And they're trading every single day and they're settling accounts and they've got all these different currencies and they've got what would the elimination of having all of these FX fees and costs and expenses and interchange and sending money to 120 different countries and to both vendors and FTEs and contractors and paying bills and accounts payable and the amount of profit that can possibly be dropped to a singular company like that can adopt a currency, whatever that currency might be. I mean, I know they were an early investor in XRP, but whatever that on-chain token is, that becomes that unit of account, that currency that then drives all that relationship equity and all that relationship engagement with every customer, employee, vendor, and partner, of Amazon and 120 different nations. When you start to put pen to paper, it that in and of itself is just that's an illuminating example of what we're talking about, isn't it?
Yeah. I think as you see, I think one thing that you're going to see like going forward, especially in terms of like how traditional businesses are going to operate, I think, and I like I said, I saw this with cloud a little bit. You're going to start seeing, and this goes to what you're saying in regards to like how much of their costs can they like cut in terms of like their margins. I think it's not so much of like cutting the costs, but and don't get me wrong, cutting the cost is huge. Cutting like 2%, 5%, whatever on like a million, billion, $1 trillion, whatever, is a ton. But I think it's the time savings. It's the instant settlements. A lot of these different organizations, and then I only say this because I spent a good chunk of like last year just studying up on a bunch of different things that brokers deal with. I read up a bunch on the Series 7, the Series 3, just seeing a bunch of the rules and seeing a bunch of stuff. And one thing that blew my mind that I never even thought like twice about was settlements. And it's mostly just the rules around settlements, like this needs to settle by the end of the day, or this needs to settle in 3 to 5 days, or this needs to settle in this many business days, and just that. And I'm like, what if the settlements were just instant, and now that time savings of cash capital assets that were locked in transit are able to be instantly liquidated and instantly engaged. And although yes, they can save like 2% on their margins and costs for fees, or maybe it's a percentage or even 0.5%, but they'll save like 20% in time because of how fast they're able to engage.
Yeah, absolutely. And before I continue, everybody, if you're on this space, do me a huge favor. You've got to follow Quincy if you're not already doing it. Check him out on X. Check out his YouTube page. He is an unbelievable wealth of knowledge and wisdom and curiosity that is infectious. Because again, the more humble we are, and the more eager we are, and the more collaborative we are, and the more relational that we are with one another, and we have those childlike eyes to see, we're all going to learn that much faster. And there is, the more we know, the more we know we don't know, and the rest of our lives, we're going to be behind the eight ball. And the best way to learn and grow and understand and have new ahas is to find inquisitive, brilliant minds like Quincy. So my gift to you is please follow follow this man, share his profile, dig into his YouTube channel, go through his X post timeline and just kind of voyeuristically, swim around in the mind of Quincy, and it truly will blow your mind. And um, if anyone does have a question, if you've got something wet ready to go, I'm going to maybe ask a couple more questions here of Quincy, and but I would like to certainly open up the floor to speakers that might have a question. So if you've got one, please feel to raise your hand. And um, Quincy, tell us a little bit about, we saw this ridiculous, we don't have to spend much time on this, but just this ridiculous, SEC Coinbase thing today, and how the SEC is trying to claim basically everything in crypto is a security, down to the fact that, I mean, the definition was so broad, it was almost having the judge laugh, that the way they had defined it is like tennis shoes are going to, Eleanor Terrett wrote up a little synopsis that said, It's so broad and so ridiculous and so cumbersome, it's not even funny." But then that begs the question, why? Why are they trying to choke out or take over maximum control of every single aspect? What's your gut sense as to, is it just pure panic and they see their relevancy slipping away and they don't want the old system to go to the new? Or what's the reason that this overreach and this lawfare and this, regulation by force, by brute force, and screw Congress? I'm a one man king. I can do whatever I want to do. Where do you see that coming from, and how do you see it ending?
Yeah, so I think a lot of that just comes down to one, a I guess you could say part of it's a lack of understanding of crypto, but I think it just comes down to a lack of understanding on what to do about a lot of these different crypto assets. I think a lot of these assets fall more into a wide variety of different categories than they do into like one of a handful or one of two or one that even already exists. But because that is too complicated and nuanced and requires like a lot of like in-depth thought and actually requires like you to be criticized on the decisions that you make, I think it's easier for them just to over enforce, and then start dialing it back for exceptions. And I think that's just a strategy, really, is because the only reason I say that is it's a lot of work to be able to evaluate all these things. Some of these networks operate autonomously. Sometimes people have applications that operate on top of these networks autonomously. Some people just have businesses that operate on top of these networks, and this is just a wing of their business. And some people have the entirety of their business that operates on these networks. And there's a multitude of a community factor, and there's an aspect of a DAO, and there's an aspect of all these things. There's so many things that like these things line in, so many different categories these things can fall into. And I think part of it too is maybe they might have a hard time trying to go one by one because of how long it would take. Like I said, like let's say they broadened like 6 different categories and started like actually sorting them out. That takes a long time. It's very easy to go, no, you're all in trouble. And as we start sort of like, and really at the same time, it's like who makes the most noise. We'll start going through and dealing with them as is. And that's just my own opinion. I think the SEC plays more political games than they actually like do any enforcement. I only say this because of the last stuff with partially with Ripple and partially the last time they jumped on Coinbase. They've just been incredibly unclear. And I feel like if they were genuinely trying to patrol the space and genuinely trying to, and I only say this because there are plenty of, look, do you want to enforce a ton of people? There is no shortage of people to enforce against. All the scammers, all the freaking bullshitters, all the influencers, all the every crazy, there are plenty of people to enforce against. There's no shortage of that. That's not the problem. It's just they don't really actually go through and do anything. They don't actually enforce anything against people who have blatantly have ran things that are fraudulent or scam or whatever. But the things that they do is one, they've penalized people that have been compliant. Usually Coinbase and Ripple that have been partially because Coinbase got like that lawsuit against them after the IPO about their stable coins, and Ripple's had their lawsuit against them for a few years now. The ones that are actually trying to like cooperate are getting penalized, while you have these bandits running around like basically just taking money out of people's pockets, and they're not actually doing their job. So it's just one of these things where if they actually just came together, and maybe it'd be quite difficult. Maybe it'd be one of those situations where it'd be a huge task force and a huge whatever it is, because whatever it is, it's gonna have to be huge. It's just a lot, and I think it's just easier just to smack everybody and then pick amongst the favorites if you really want to put it that way, but. Pick amongst the ones who yelled the loudest and take it
Yeah,
from there.
yeah, I tend to agree with you, but the problem with everything that we're both in alignment and agreement that that's what's happening, but it has 0.0% reflection of the principles of the Constitution, and that makes it really hard because it's not you know I'll pick my buddies and instead of a free market, it's just the whole thing about for me, the easier thing to understand is it's not only because Gary Gensler taught, what, however many classes he
Yeah,
taught at
I
Harvard,
actually
he
watched all
understand.
those. They were
Yeah,
pretty. Oh, sorry.
now, I was going to say he understands the industry, but I think more than the easier explanation, the more simple explanation is that he's been ordered or highly suggested that he does everything necessary to protect the incumbents in the banking industry more so than be fair, honest, and open and judicious about regulating the new disruptive ecosystem. His main assignment is to don't let those guys mess up our business because we've been here and we've been here a long time, and you're one of us, and these upstart hooligans you take care of. You handle them, Gary. That makes more sense than his incompetency or inability to actually, be fair and issue. Look, where's Congress? No laws, right? The SEC doesn't get to write law, but they're doing law by enforcement. So it's a convenient, plausible deniability of, we're just a bunch of dodo birds that don't know how to shoot straight. But that's really not the case. I think there's something more deeper than that, and but anyway, that's not what this space is about. Um, Mr. Prometheus, you have a question? You got your hand up, brother. Go right ahead.
Thanks. Yeah, great points so far. I just wanted to bring up a question for Coin Club. So I don't know how
You can
much
just
you
call me
study.
Quincy.
Quincy? Quincy.
Yeah.
Hey, Quincy. Good to meet you, man. So I don't know how familiar you are with El Salvador, but I've got their president and their GDP growth in front of me, and it's amazing. They've grown since he took over in 2020. Their economy has grown by more than 20% for the last 3 years, and it's expected to, go into the 30%, which are unheard of numbers, by the way. Like, I don't know how they're doing this, but it seems to me that being pro Bitcoin and adopting a Web3 attitude has been beneficial for the economy. And before you give your thought, I just want to share one, historical fact, if you will, an economic historical fact, which is that in the 70s, 80s, and 90s, there was a bunch of countries that didn't follow the then recommendations, if you will, of the World Bank, IMF, whatever, which was to they went against the grain. They were told, oh, open up your economies, let all the global corporations come in, and that's how you're going to grow your economies. Take these giant loans from us, go into structural development programs, which essentially is a fancy way of saying, like, right, take money away from things like education, healthcare, whatever, and put it into our pockets. But those exact countries were Singapore, Thailand, Korea, and Taiwan and Malaysia. Okay, they didn't open up their economy straight away. They built infant industry. Like literally, Korea was mocked for creating their chaebols. Oh, they're gonna go up against Panasonic and create washing machines. All of this was the mocking attitude back in the day. And today, they have some of the largest companies in the world. Companies like Samsung and you name it, right? And that's because they went against the then economic kind of like mainstream positions that were being advocated by these global institutions. So today, the same language is being used for cryptocurrency and Web3. They're saying, oh, don't adopt these technologies. Trust in our central bank digital currencies and all these other things that we're developing for you. And the country that, the example of El Salvador that has gone against this recommendation, if you will, seems to be doing quite well for itself. And so, their murder rates have dropped drastically again, also because of radical policy decisions taken by their rather young and ambitious leader. So I suppose that's my question for you, Quincy, which is how do you see, these developing countries and emerging markets adopting, this new system, and what do you see going forward for the ones that are going to be pro these systems versus the ones that'll, shy away and maybe take up the kind of like standard economic doctrine being put forth by the global institutions?
I think, especially with the example you gave for Ecuador, I think as you start seeing like these smaller economies, and especially smaller economies, because that's where you start seeing a lot of the dramatic growth. But because you start seeing a lot of these barriers come down, their access to more different parties, their ability to be able to engage is going to increase, or at the very least, their access is going to increase, as well as the settlements and all of that. I think you're going to see not only just economic growth, but hyper economic growth. And I say this for the smaller economies because they'll already have hyper economic growth. Like, the average economy might have like 1-2%, maybe 3% a really good year. And some of the smaller ones might have 5-6-7%, and they're tiny, but you might see this like 10-15-20%. And you see this with crypto in a sense, but you see this with people getting into crypto. You don't necessarily see the ramifications of people being able, they're not even the ramifications, but the efficiencies that are encapsulated or utilized when people are able to not even just run similar like activities or similar applications, but the biggest thing is just the efficiencies are able to garner a level of growth that is just unmatched. And that's just one of those things where I feel like, and you'll see, like I said, you see them on the extremes with the smaller economies. Even in the bigger economies, you'll probably see them in a larger regard. It's presuming they actually want to adopt some of these. But I think the biggest thing is, it's funny to say this, but those smaller economies, I think I said this earlier, but the smaller and the more individual the entity, the organization is, usually the less power they have in like the global stage in terms of being able to trade. But they usually get the most value out of being able to have access to all these, as opposed to like JP Morgan. They already have their business model. They already have their trade partners. They already have everybody. So a lot of these like traditional businesses are kind of just sitting here going, we already run our businesses the way we already do, where you may see different startups or different smaller economic forces, different whether it's like Ecuador or other countries, you'll start seeing these people that can, or people, countries, entities that can utilize these technologies will get actually more value because they don't have this traditional infrastructure, or they have to use somebody else's traditional infrastructure, and they're paying all of this money. So it actually means a lot more to them, and it'll allow them to grow a lot more because they don't have all of this. And I say this, a perfect example of this is I was talking to, like I said, I was talking to the guy that was creating a marketplace in Africa. And It was, I forgot what I brought up. I brought up something so casual, like, oh yeah, this maybe it was something about like trading or Robinhood, and he was just like, oh yeah, there's just we just don't have that here. I'm like, what do you mean you don't? Like, I don't even know what it was. It was just like a really like casual like trade thing, and it's just like they just didn't have like enough like either parties, or you had to be so big to have access to so many. Like it was something like, maybe it was like market makers or something, and I was just like, really, like you just, and they just, it's because they just don't tangibly have, and it's not because they just don't really, it's because all the capital pools to a lot of these big organizations. So if you don't already have that capital, you don't already have that infrastructure, you usually have to resort to going to one of those entities that do, or resulting to something that's, suboptimal. That's why it's so valuable, at least in that instance. It was so valuable to have that peer-to-peer aspect, because it cut out all that infrastructure that would otherwise need to be facilitated in some regard or not, and they're able to just conduct in whatever aspect of trade they wanted to. And it means more to them because they weren't able to do it before, so now they're able to. Where whatever traditional business, whatever traditional entity, traditional organization, they already have their business model. And I only say that because this is what killed Sears. Like this is like the joke. Like Sears could have been Amazon. They took the Sears catalog and they just moved towards the internet. Sort of like what you stated earlier, Prometheus, where if they were sort of the first ones to just sort of just do what Amazon's doing, Sears would be amazing. But they didn't, and they sort of just became these retail like department stores or whatever, and they just stayed that way. And everything changed to online, and it murdered them. They so quickly too. It sounds weird, but in a fraction of the lifespan of it, like, because Sears is like 100-year-old company or whatever. In a fraction of that lifespan, Amazon became bigger than it ever was, like simply because it utilized the new technology in a way. And that's the thing, it didn't fundamentally not that much different than what Sears was doing. It was providing, I mean, don't get me wrong, they've provided books and now they moved on to everything. But that's sort of what Sears and Walmart and all these other, and don't get me wrong, Walmart's probably the biggest contender in terms of big businesses moving online in some regard. But it's just one of those things where, just like that, they thought, hey, we are the big guys. We have our infrastructure. We have our business model. We're not worried about that. Till a little, company called Amazon came in and said, we're selling some books. And we're doing it in a way that nobody else could do it. And we're going to move more than just books, just like we're going to move more than just currencies, more than just, like I said, commodities, like all these tokenizations. It's more than just these one or two things that we're just bringing up now. It's easy to be able to bring these things up now because these are the things that we're able to see. And as we're able to see and build more things, you'll see, just like the internet. Like I said, like, can you imagine trying to like anticipate Amazon, Google, Facebook, any of those? Like it's like, but after the fact, it's like, oh yeah, the next Facebook, the next Google. It's so easy to say, to reflect back on and go, oh my goodness, like that was so great. But it's hard to see it as it is. And don't get me wrong, people gravitated to these things because they were useful. Not useless. The people gravitated to Google because, oh, I'm able to use these things. And don't get me wrong, like, this may get into the whole like utility argument with crypto, but the thing that drew that adoption was the use that people got. And that's what killed a lot of these, the incumbents, I guess you could say. But yeah, it's just I think there's something to be said in who's to be the winners in this new digital economy with the ability to be able to trade with anybody online. I don't think that was the case in prior or in the traditional system. And I think you can now see, just like just like Instagram sold for $1 billion to Facebook, and they had this, and people may go, oh, they never made any money. They had the infrastructure of Facebook in a way that Facebook can now deploy ads in a way that Facebook can never do themselves. So they really did create the ultimate product for the biggest business. But the thing is there are 12 people that did that. Just like you stated earlier, Rob, there's probably gonna be the next billion dollar company that has 4 people. Maybe it has 3. Maybe it has 1. Who knows, man? And that's the thing that's just like, holy cow. Like, and remember, Prometheus, you were sort of saying the thing earlier about economic growth, but what does that mean in terms of economic growth, in terms of people being able to build these new services and these services being able to scale? Like, that's the growth, and I just think that's just an interesting thing that's going to happen, and you're going to miss out on it the same way that, like I said, if Sears just moved their Sears catalog to online, they would be Amazon right now. And I think a lot of like big banks are going to be the new Sears, hands down.
Yeah, I definitely see that as well. It's so funny. I kind of did this thought exercise a few days ago, and I wrote down a chart because everybody talks about how Ripple is going to be the Amazon of crypto, and And that sounds great, and I get it. They're early, and they've been doing it for a while. But I really started trying to break that down. I kind of did a side by side with Amazon versus Ripple. Amazon launched with a Kindle. Ripple launched with cross-border payments. Amazon spent about 10 years just building out the Kindle. And Ripple's been spending since what, 2012, 10, 12 years trying to build out an architecture and a network for cross-border payments, building out the network. The Amazon was, at first it was kind of national, but then it was global. Ripple's global. Ripple then, or Amazon went into AWS. Ripple's got RippleNet. Now all of a sudden Amazon is literally everything. People don't even know what a Kindle is these days, but they built the infrastructure around a single product. They built a network that was global. They built utility and the ability to do things that are so far beyond the wildest imaginations of that single product that they came to market in. And you know, here Amazon is e-commerce and they're the everything store. But what's Ripple trying to be? They're trying to create this internet of value with Ripple Net and be the everything of internet of value, the internet of things, NFTs, who knows where they're going to go. But the point being is, if you look at the parallels with who would have thought that, I mean, how long did even Amazon get mocked because they didn't make any money forever and their stock went to 100 and then it went to 3 and all they were doing was working on this stupid book thing and this book reader. And the next thing you know, their network exploded all over the world. And I see such a parallel with RippleNet. The once the architecture is in place, there's a video clip I just put up in the jumbotron that has got a little clip of the CEO of HBAR, Algo, and Ripple talking around a table, talking about how they're going to start collaborating together in 2024. Three completely different, mind-bending utility business models, and the reasons and the purposes that Algo's built and Ripple's built and HBAR Hedera Hashgraph is built. They don't have really, at first blush, they don't have anything to do with each other. But when you start collaborating in these CEOs and the creativity and the solutions and the brand new utility that people had never dreamed of before start working together, now my hair is it's not gonna just hurt, it's gonna fall out with the possibilities. I just think it's one of the greatest times to be alive ever.
Yeah, yeah. I think one of the big things that we're gonna end up seeing too, especially in terms of like one of the craziest times to be alive. I know this is a interesting or not interesting, but this is like a common topic. But like the great wealth transfer or the greatest transfer of wealth in the history of mankind. I think we're gonna see something sort of like that, but not in the way that you sort of think. Sort of in what Prometheus said is this economic growth element. I think you may end up seeing people that never had access to opportunity be able to capitalize on opportunity they never thought they'd have access to. And don't get me wrong, this could be something as simple as people being able to invest in these networks that are being built upon and people are able to use. But this could also be like some random developer in some random, third party country that we just don't even know how to pronounce, being able to build the next big thing simply because they have access to a whole wide array of different parties, participants, services, applications, just networks that they can engage in. And they can build, services, applications, and all that in a way that would be relatively challenging in a traditional sense.
Yeah. Again, Molly Elmore and Jimmy Valley published this book. I think they released it out today, and it's entitled Prosperity Unleashed. And it really talks about, it's a 22 post thread that they put together about how going from a debt based to an asset based model around the world and how it's going to allow prosperity to explode and the ability to tokenize whatever's in the ground. Oil rights, we do that already. The big oil company can get drilling rights to thousands of acres of land in a particular country, and although the asset's still under the ground, they've got a drilling rights and a permit, and that contract, which could become tokenized, is a thing of value. It's a unit of account. It's liquidity. It's spendable. Whether and the resource is still in the ground. And so when we flip the model from an asset based backed currency to from a debt based currency to an asset backed currency that can tokenize the resources that exist in these countries south of the border, south of the equator, and all over the world, and we don't have to sell them to a Western developed nation for 1 penny on the dollar and work for slave laborers while another advanced country comes in and land just basically rapes these third world countries. That whole model flips, and it doesn't drown them in debt. And take growth off the table. I don't care if they grow 1% or 2% or 7%. If they don't have usury debt and they can write contracts that monetize the natural resources and get a value for that, even if it's 15 years before it comes out of the ground, and they're not having to service usury interest rates and hold on to and be the victim of QE1 and QE2 and Fed pumping and just debasement of the currency, it just everything changes for the better, everything changes for the righteous when we can go back to a system where every country can take care of what's in the best interest of their people inside their sovereign borders with the resources that they have and the creativity of the humans in that nation to collaborate and work together and build new things and build vision and not be debt slaves to anybody. That is what really excites me more than anything. That is breaking up this centralized banking cartel at the top and bringing wealth back down to the level of where it is the closest level that that wealth is created, and that's at the individual level. It doesn't need to be Hoover vacuum cleaned up to some big Western oligarchy private banking syndicate, and then they pass out the breadcrumbs and tell everybody what they can and can't do with their currency. It's going to completely flip everything upside down. And I encourage you, if you're hearing this and you're interested in learning more, look up in the jumbotron. I sent out a post, but it's a link to Val Hill Advisors, basically laying out what happens to our world when we go from debt based to asset based currency. It's really exciting.
Hey Rob, I completely agree. I'm just gonna make one slight, change in the wording of what you said. I wouldn't call it debt backed, because debt doesn't back anything. In fact, it takes away from the backing.
Touche,
Uh,
touche, touche. It's a wealth extraction tool, is what the debt currency is. It extracts wealth from the people and puts it from the majority and puts it. It is the reason 1% of the wealth is in the hands of 90%, or 90% of the wealth is in the hands of 1% of the people in the world, because of this exact instrument.
Exactly. And, you look at countries like Gaddafi's Libya, which didn't have debt, and how prosperous they became prior to that unfortunate, dethronement. Um, it's savage what this existing system is willing to do to take down any competition that it sees. But in the process of doing so, it has also, laid the seeds for its own inevitable demise at this point, because their corruption and lack of utility is so obvious to see. I was in a space with Charles Hodgkinson, the founder of ADA, the eighth largest blockchain system in the world, and we were talking about like development economics, and he was just saying that cryptocurrency didn't just come out in a vacuum, right? It came out directly as a result of tyrannical or inefficient systems becoming so overbloated. Like, you read the Bitcoin white paper, there's a direct reference to the '08 financial debacle. It said that no, like, there needs to be an instrument for the people that they're able to even speculate against, as well as use as a dedicated asset. And that's why Bitcoin is being created, and what a revolution we've seen since. So I think that for whatever economic challenges that may come, and we are living through one right now, and it's about to take another turn, shall we say, because it's folks, it's going to get more difficult than it before it can get better, at least from a macroeconomic perspective, not necessarily from your own personal lives, by the way. Get active, start learning about this stuff, start taking radical action today, or this week or this month, because there's gold mines here. But the broader point I just wanted to make, based on like what Rob was saying and what Quincy was saying, is that Quincy was saying that Sears could have been the Amazon. All they had to do was take their existing product line into the next iteration. Well, now it's time to take your e-commerce stores, or if you don't have an e-commerce store, build one and be able to accept Bitcoin, Ethereum, and everything else. Like how many folks are doing that? Sell your services in these emerging monetary systems. Don't just be a passive observer in this space. That would be my biggest recommendation from today's discussion. If you've taken anything, all three of us, where we're active in this market, and there's many others, I'm sure, amongst you in the audience who are as well. But if you've never done it, like buy your first Bitcoin, learn about what why is it that the banks have gone from a can't beat them to join them stage when it comes to this sector, right? They tried everything to suppress this sector, and it has burgeoned in spite of it. And so you are going to, this is also one of the observations I've had about this sector, which is that these are positive systems. They're positive currencies. They are not created out of debt. Every other fiat currency almost in the world, whether it's the pound, the dollar, whatever, these are currencies that are created out of debt, except for perhaps a handful of Middle Eastern ones. And so that's always been the wealth extraction tool, as Rob has been saying. So get active, get learning, and excited for this next chapter. Let's build some of those $1 trillion systems together, shall we? I think we can.
I think, to your point, it's better to give to receive. I've read that somewhere in a book, but I just want to shout out to everybody that's on this call that they could be doing anything else they wanted to do on a Wednesday night. And here we are asking questions. We're learning about something that most people don't have any clue about. Soon, 6 months, 12 months, 18 months, the people that are going to need us versus those that have any interest in talking to us today is going to explode. We're going to be leaders, whether we want to be leaders or not. We're going to be teachers. We're going to help people understand what this is all about. There's going to be a lot of fear because fear comes with change. But there is going to be a tremendous amount of change in the way money works, the way life works, the way government works, the way education works, the way, communications work. I mean, when you stop and think about it, it hasn't been 12 months, and we've got people that can jump on a Spaces call and click two buttons, and folks in 40 different countries can be talking about anything they want to talk about. A phenomenon like that has never, ever existed on Earth. And yet, here we are talking about positive currencies, assets instead of debt, collaboration, interoperability, utility, scale, infinite vision, creativity beyond our wildest imaginations. And we're 12 months into being able to speak like this without getting doxxed and deplatformed and called every name in the book. I mean, the folks on this call, I salute each and every one of you, because we are going to be leaders. We are going to need to give of our time. People are going to hunt us down more than we probably even want to be hunted down, for knowledge, for help, for guidance, for wisdom. How did you know? Prometheus, who told you? Do you have somebody in the business? Did you read one book? Why didn't you tell me, Prometheus? Come on, Quincy, man, you should have told me to get on this stuff earlier. I could have gotten rich quick. I don't want to do all the 18,000 hours of learning and research and knowledge and actually understanding what's going on. You should have just given me an insider tip, Quincy. Why didn't you? I mean, I know I'm trying to be I'm a little facetious here, but everybody needs to know that's coming. That wave is going to come. Who, what, when, where, how, why? Why didn't you tell me? When did you know? Who tipped you off? Man, you're so greedy. And then they're finally going to have to say, okay, what do I need to know? Tell me how this happened. What should I do next? And I just think that's it. To me, that swells my heart. It fills my spirit because we're going to have the opportunity to be those people that are going to give and teach and share the abundance of what we've invested, what we've learned over the last year, 2 years, 5 years, 8 years, however long we've been in this. We're going to get to pay it forward, and we're going to get to pay it forward in a way that's going to help generations benefit from just a whole new mindset. Um, it's cool to geek out on the technology. It's cool to talk about all of how this works, and it's necessary. It's critical. We have to have the knowledge, but we also need to have the understanding and the wisdom that comes with that knowledge. And what we're living through right now, no other generation in human history has lived through. And the world going forward from this era, this year, this last 5 or 10 years, and the next 5 or 10 years, there's not going to be anything that comes anywhere close to the level of quantum change and quantum consciousness, if you want to call it that, quantum spirituality, quantum potential, quantum wealth. There's so much that's going to come, and it's going to decentralize these concentrated pockets of power and wealth and authority in ways that I think it was intended to be all along. But I'll land it there. Quincy, I, I I want to be very respectful of your time. How much more time do you have with us? And you've already given us so much. I can't tell you how grateful I am to have met you and to learn even more from you tonight. But I do want to be respectful of your time. How much longer can we have you?
I can go to the end of the hour.
End of the hour. Okay, cool. 15 more minutes, folks. So um, I want to back away, and I want others to ask questions, and please don't be shy. There's a lot of brilliant minds on this space right now. I don't give a damn about quantity of numbers. I'm looking at faces and I'm looking at names, and there are some absolute geniuses and brilliant thinkers on this space. So if you've got a question, I'm just going to encourage you to take advantage of, you know, picking Quincy's mind, letting him give you some insights because he's in the battlefield, he's in the trenches every day. Um, while I wait on a hand or two and
Yeah,
get the
I got a
backs.
question, Rob, for Quincy.
Sure.
While we wait, and guys, please, use this time to, put a question in the comments or come up. Like it's a great way to learn. You don't need to, be knowledgeable or anything. Asking the right question is far more important than having the right answer. And with that, Quincy, I wanted to ask you about like what is it that you're currently working on, and what do you foresee yourself, like you mentioned the arbitrage plays, you mentioned how it is, your journey into this space has evolved. Where do you see it going forward, and especially as we see things like artificial intelligence and all these things coming in? I'm sure you're more than familiar with systems like Aladdin and all these very powerful already existing trading algorithms that exist in things like the forex markets and derivatives and whatnot. So increasingly that's also the case in crypto, and I actually see crypto as the most organized technical monetary systems in the world. You can organize them even much more succinctly than many other systems, right, that are mostly in the control of, like, shall we say, traditional actors, whether it's government, central banks, etc. So where do you see yourself working in this regard, and how do you see especially the advent of algorithms and artificial intelligence coming into this space, and Yeah, what do you see will be the implications of that?
So what I see being, at least for the big thing in the space now, is, or at least what I'm trying to do, is on board. So before we see anything, whether it's new services, automated services, startups, AI, any of that, there's like this onboarding process, and like it's like the notion of like tokenizing and all of that, but it really is the notion of that conversion, whether it's finding startups or whether it's finding traditional businesses, and getting a certain level of like saturation of these different whatever assets, or it doesn't really matter what it is, but being able to take activity that already exists and being able to bring them on chain. And at least for me, I think that's the biggest opportunity that there truly is that that's truly the hold on a second. That's truly the best opportunity that there is that there's going to be a huge wave, and mostly it's just the efficiency, but there's going to be a huge wave of people coming into the space that are trying to form businesses, that are trying to take already established business models and solutions, and it's that conversion, being able to convert them over, both in regards to uh, in regards to moving their traditional infrastructure over, but also being able to encapsulate on tokenization and being able to have access to all these new parties.
Awesome. Yeah, I would agree. We've got Jeremy, I think, on stage. Hi, Jeremy.
Hey, how's it going?
Welcome, brother.
Thank you for having me. Um, Thank you guys for letting me come up and share this platform with you guys. And I just want to know, in you guys' everyday life, do you, when you try to tell people about crypto or anything like that, what's people response like in you guys' everyday life? Do they not want to hear it? Do you think you're crazy? Um, I just want to know how does that work for you guys in your everyday life?
Yeah,
Yeah,
Jeremy, I think that's a brilliant question, and it's so important because I think about this. First of all, we know money makes the world go round. Okay, yet we're not taught money. We're not taught money K through 12. We're not taught even basic economics, guns and butter, the supply demand, that type of thing. Where it's the weirdest thing in the world. It's the weirdest dichotomy in that money is so critical to moving wealth. It's an expression of our work and our effort and our labor. It's a unit of account. It's supposed to represent our value that we give, into the world, and it's supposed to be spendable. It's something we can earn for not only our generation but our kids and our kids' kids. So we're kind of taught to think two generations down. More than 40% of the law book, which is what I call the Bible, it's a law book. That's operating rules and principles, and it covers every topic in the world. But 40%, the single greatest topic in the law book is money, materialism, wealth, the dangers of money. It talks about money is just a tool, and it's something that we use so we can scale ourselves. And an airline pilot doesn't have to be a car mechanic and a painter, and a dairy farmer. He can, we can, use our talents in the world. We can get money, and then we can store it. We can use it, and a dollar in 1900 should be the same. It should be theoretically the same as a dollar today. Inflation steals from us. The whole system is broken. But here's the key thing. Why would, in a supposed Christian nation where over 40% of the book focuses on money and wealth, do we have the most ignorant society in the world when it comes to money? Why do they not want us to understand what money is and what its purpose is and how we should use it and respect it, but not worship it? The purpose of, so to answer your question, most people, their eyes glaze over. I mean, there's a very tiny minority that want to talk about money because we're starting from a basis of financial ignorance, and they can't define it. They don't know where money comes from. They don't know how it works. It's intentionally been made extremely complicated. So it's just, oh, my broker handles that. My tax accountant handles that. Or, oh, yeah, they talk about how much money they make in income instead of what their net worth is. And they truly do not understand the way in which this monetary system has been constructed and perverted for the benefit of the few, not the many. And so when you start talking about fixing the broken system or things like cryptocurrency and stable coins and monetary systems and reforming the banks and sound money versus fiat money, I'm just, from my own experiences, and I think everyone that I've spoken to, one out of 100 people, or maybe two out of 100 people, want to have the conversation with you, and the others don't even know where to start. So, Quincy, what are your thoughts? How do you advise people?
Yeah, so it's funny actually. Usually people that you so there's like sort of two elements of people that aren't really in crypto. The purely ignorant people that know nothing about anything and they're like, I heard of a Bitcoin once. And then there's sort of people that are like, I've heard of Dogecoin and Bored Apes and sort of stuff, but they don't really like know what to do with that. And usually the people that are the best to talk to are the people that don't really know anything, because I usually just start from like a ground level. Like, don't even worry about cash, money, any of that. Let's just talk about like what can you do in these networks and what are people doing, or at least what am I doing? And it's really easy to ground them in that because they don't have Doge or memes or any of these other things sort of like clouding their idea of what could be done. And usually starting from the idea of what if you can create automated services and bring assets that you would otherwise be able to utilize in these traditional markets onto these like decentralized markets, and then going from there. Now, when it comes to the whole like cash, because people always ask, oh, well, what about the investment and all of that? That becomes a little bit more of like a nuanced idea, because then it's like, yeah, people speculate and there's that, but there's also this idea of this continuance in the growth of demand based off people being able to engage in these services. And usually if they're relatively like interested or even like generally educated in that domain, they're like, oh wow, cool, and maybe start a conversation. Usually that's sort of where the conversation ends, and it's almost like you're talking about finance or AWS or any other sort of like mundane sort of niche field or whatever. And it's funny because I actually like that a lot. Not that I really like that; it's sort of annoying. But it's easy to be able to convey a lot of ideas, at least from someone who hasn't had any experience at all. Now with people that, like I said, have heard of Doge and memes and NFTs and stuff, usually I spend like half the conversation like redefining what an NFT is, and the biggest thing is it's just going over like not even just redefining, it's just going over the definitions so I can move past whatever preconceived idea that was sort of attached to that. Like I said, with the NFT, when you think of Bored Ape, people sort of have a hard time leaping that Bored Ape to like a token or asset or something. But it's just one of those things where it's just like once you sort of get past a lot of the confusion, it's a little bit better to be able to explain a lot of these. I think the biggest thing that's really difficult, and sort of what you were saying, Rob, especially when it comes to like even just money in general, people just aren't very familiar with a lot of these, and at best it's usually like not the biggest deal. It's like, oh cool, this is new. At worst, people maybe get too tied up in something and potentially ruin themselves because they're not very familiar with a lot of these. So it's just one of those things where, at least when I talk with people, like, and don't get me wrong, when I talk to people in the space, we just talk about stuff in the space, obviously. But when I talk to people that aren't really in the space, it gives me a chance to really, I guess for me, refine my skills on being able to articulate what's going on from somebody that may not have, all of these other terminologies like tokenization, real world assets, blockchain, DeFi. And it's just really cool to be able to really show what's truly interesting about these spaces, at least for me.
Well, Quincy, brother, I can't even begin to tell you. I don't think I could. I can't put a value on how much I've learned just tonight, and how grateful I am that you agreed to come on our space and I know this recording is going to get shared widely. I know it is by me. Um, so grateful for your patience and your generosity and your willingness to break things down from your perspective. And Jeremy, I want to encourage you, brother, that you can be that leader. You can be that community leader. You can become a subject matter expert. It's so funny. I own a training. My wife and I started a training company 22 years ago, but we read something last week that said if a person would spend 18 minutes a day learning anything, whatever their topic is, in 1 year's time, they'll be in the top 2% of the world on that topic with 18 minutes a day. So, Jeremy, you got an opportunity that you don't want to waste your time casting your pearls before the swine. A lot of people might not want to know it, but once they find out that you're the Michael Jordan of crypto in your neighborhood, they're going to come after you. They're going to find you, and you're going to be able to serve your community really, really well by giving them incredible wealth and knowledge and wisdom, because people do need to know this. It's just the system of public education has not done a very good job in serving people as to how to be good stewards with their money and how to manage it and what it is and all the things that are related to money. So I appreciate you asking the question, brother, because we've all got a role to play. And it doesn't mean that we have to be experts. It means we just have to be willing to dig in, and do the work, learn what we need to learn. And next thing your people are going to seek you out. So, everybody, please, if you don't mind, make certain 100% that you're following Quincy. You tweet this space out maybe one last time when the recording pops up and the space is over, because everybody needs to hear this. They need to understand the context and the perspective of where we are in history, what, how we're just barely cracking the surface. We're literally at the Kindle stage of Amazon. And there's so much from this day till we take our last breath that's going to change because of these quantum technologies, these scalable technologies, these interoperable tokenized ass. I mean, tokenization is just digitization of anything of value. Is that a fair statement, Quincy?
Yeah, yeah.
So what's valuable to you and what's valuable to me and what's valuable to somebody in Canada and what's valuable to somebody in Zimbabwe, it's kind of in the eye of the beholder. But if it's of real value and it can be tokenized, it's mind blowing what can happen to wealth and collaboration and business and invention and productivity and creativity when things of value can be tokenized, and then the tokenization can be measured as a unit of account, turned into liquidity, swapped for any other thing of comparable value, and you can do that on a level playing field across 195 countries in a frictionless, almost free manner. I mean, I just we it's beyond words and thoughts to me as to how much potential our world has going forward. So, Quincy, thank you, my friend. I hope we can do this again, and I really respect you and thank you for your generosity.
Thanks for having me, man. It was cool having this space. I love trying to chat with as many people in the space as I can. I chat with as really anybody. Chat with developers. I chat with business owners. I chat with influencers. I see Zach Rector down here. I was chatting with him last week. And William Duvall. I actually hung out with them in Vegas. So it's just really cool being able to just find so many different people in the space that want to collaborate and talk and be able to have these discussions. So thanks for having me.
Brother, love you, man. We'll do it again soon. Everyone, I've got guests in from out of town, so I'm going to have to end the space tonight as well. And next Wednesday at 7 o'clock, I hope you can join us. Quincy, thank you, my friend.
Thank you.
Hi guys, just wanted to say I'm from Zimbabwe. Just want to say hello. I want to speak to Quincy if you can hit me up. Very important, everything I heard from you. We have massive digital gold that just made in Zimbabwe. And I didn't want to interject, but I had to. Thank you, guys. Quincy, hit me up
Wait,
immediately.
who's speaking right now? Is that Kilt 2? I'll follow you. DM me.
Yeah, it's Clicto.
Clicto. My bad. Clicto.
Yeah,
Cool,
it
got
means
you.
crypto,
DM me.
but it's a Zulu word for crypto. So I just adopted it's Clicto because we use clicks
I
when
like
we
that.
talk.
No, it's cool. No, DM me. Yeah, for sure. It's cool. It's cool.
I can't DM me somehow. You don't have an access. You can DM me
All
because
right, I'll DM you then.
Thank you, guys.
Hey man, thanks everyone for being here. Clicto,
Thank you, bro.
I love that name, brother, and the fact that I had maybe my first resident from Zimbabwe on a Spaces call. You made my night, brother. Thank you for
I
being
know
here.
you mentioned my country. I had to budge in your space. I didn't want to be disrespectful, but everything I'm hearing is just amazing.
Man, glad to have you. Glad
Thank you,
to
guys.
have you. All right.